everyone. This week, I decided to bring on one of my past clients that I've worked with for a few years. I thought it would be really beneficial for him to share some of insights when it comes to investing so we can gain some perspective. I think it's really important to learn from people that have been there, done that. We're gonna just do a little Q&A here. First of all, tell us what it is that you do professionally, just a bit about yourself.
Sure. So I've been working for about 25 years as a medical practice administrator, which means I handle the business side of medicine, working in private practice for the past just about 23 of those years. So the first few years I worked in hospitals.
When it comes to investing in the stock market, when was it that you actually got started?
Well, right out of graduate school, took my first job working at a big hospital in New York City, and I started investing in the 401k for retirement there. And then I learned a little bit more about the stock market as a result of that, and I've been doing it ever since.
And did you have a set percentage that you would invest?
When I first started, I was earning just about $30,000 a year, and I was able to save 10% of it. So I've been going with that as a minimum ever since then.
That's pretty good. A lot of people delay investing until they feel like they have enough money.
First, if you wait until you have enough, you may never get to the point where you actually invest, because I think just as part of most of our nature is that we don't think we ever have enough or the ability to do something. So the sooner you get started, the better. The way I really got started was first through the hospital's investment program for 401k, but then I also reached out to somebody in the family who was a really savvy investor and a pretty successful person. I asked him what to do, and he told me to begin investing in mutual funds, and I started investing $200 a month, I believe it was back then. It may have been less, but ever since then I've been continuing to invest with an automatic investment program each month.
A lot of people that I've talked to, they're too afraid to get invested. You've seen markets like this where they're up and down. What have you done in the past when you've invested money and it's gone down?
Continue to invest money because I can buy shares of the same stock at a less expensive price. So if you believe in a company like Coca-Cola or Amazon or any of them, if you believe in the company and what they're doing, and you believe that they'll come back, you can buy more shares when the shares go down. Especially for younger people, when you're in your 20s and 30s, you have 30 and 40 years to withstand that volatility. When you get to be older, like I am at 50 years old, you don't have as much tolerance for that volatility. But I continue to invest and invest the same amount each month, irrespective of what the market's doing. If you need the money tomorrow, that's another story, and you probably shouldn't be investing at all. But if you're in there for 10 years or more, history has shown that the stock market is the best way to invest your money over time.
So you invest the same amount every month?
Initially, I stayed with the same stocks and mutual funds each month, and I had a very small handful. I have 3 children, and I advise them to pick a few companies that they like and to look at those companies individually and invest just very little each month, whatever they can afford to do, but to make sure that it becomes part of their daily routine and a habit on a monthly basis.
Yeah, that's really good advice. It's very important. You know the saying, what you do with a little, you'll do with a lot. Yeah. Has there been any time in the market where you sold everything because you were too afraid?
No, never. Conservatively, probably for the first 15 years, I probably didn't sell a single stock.
Wow.
I just invested and continued to invest the same amount month after month into those companies.
Okay. Is there any times that you've invested that you've just regretted it?
There haven't been any times where I've invested and regretted it, but there have been times that I've missed things and regretted it.
How do you get over that?
I don't think you can recover from what you've missed in the stock market, but you can always get in if you feel like it's still a good investment. So something like Amazon, everybody wishes we could go back however many years it's been that Amazon's been a publicly traded company and buy it on opening day. I didn't do that. It would have been great to do that. But at some point I did get into Amazon, and I do think it's going to continue to go up. I believe in the company. Yeah, the last major correction, correct me if I'm wrong, but I think it was in 2008. That was when the market really took a dive, and a lot of people lost 40 and 50% of their savings, of their earnings, their savings. I didn't sell a single stock at that point. Within, I think it was 2 years, I had come back and gone up, well beyond where I was in 2008 when it dropped. My portfolio itself dropped about 17%, but I've fully recovered. Had I sold those stocks, I never would have had a chance to make the money back.
And I have seen that with all the clients that I've had that have found success in their investment portfolio. They didn't sell when that happened.
And not only did I not sell, but I continued to make the same monthly investment that I had made in 2007, 2006. I didn't stop investing because the market went south.
Okay.
I expect the market to go up and down, up and down, up and down. But over time, that line goes from the bottom left to the top right. of your screen if you're looking at a chart. I mean, that's been proven. Again, it doesn't mean it's going to happen forever, but it's been going on for the last, I don't know, 60 or 70 years. So I'm going to ride that wave. And
yeah. How have you decided how much of your extra cash flow you're investing into the market?
Yeah, so just like everybody else, I probably don't have any extra cash, but I think it's a lifestyle decision. I think it has to do with what you're willing to live without and to live a little bit below what you can have. So like if you can afford a big fancy house and a really nice car, but you want to set yourself up for retirement, you have to make smart choices for retirement. That car, that house will not help you in retirement, but investing in the stock market probably will, as those assets continue to appreciate over time. So I've just set a goal for myself, and I constantly look at that, and in order to get there I have to have a really aggressive plan to make it happen. But if I buy all of these other things, I know I'll never get there.
Yeah, my last couple of videos I've been talking about retirement and trying to help people figure out how much they need to save, and I feel like that question is very individual.
I wanted to be financially successful, and the way I define that is having enough money to do the things that I want to do, not having to work for money doing things that I don't necessarily want to do.
If you were to rewind and you're 30,
right,
would you make the same decisions that you've made financially, or do you think that there's things that you've learned along the way that maybe you would do a little differently?
I've always taken an aggressive approach. I would probably do the same thing. I wish I would have put away more money. I've looked at some of the money that I've, quote unquote, wasted over the years on things that I didn't need. Would have helped me get to my number a lot faster.
I hear that a lot from people that are like, I wish I put more away. I think everyone feels like that, but why is that, I wonder?
Why you wish you would have put away more?
Well, yeah, I mean, in your case, because from the outside looking in, it seems like you did probably a great job.
Right. It probably has to do with the fact that when you buy something that you don't, quote unquote, need, I believe we should buy things that we don't need just because we get enjoyment from them. They give us some fun in our lives. When you look back at the expense sometimes versus what you got out of it, and then you compare that to, wow, had I invested that few $100s or a few $1,000s in the market, what would that have become? So when you really begin to understand what the power of compounding, of growth over time that is, you begin to think twice about spending frivolously, I think. Investing and having your portfolio grow over time takes a lot of effort and commitment. It's not easy to do. It could be easier if you set it up so that it happens automatically. If you work side jobs, Uber Eats is just Uber drivers. If you're doing that as a part-time job and you don't need that money to live, I would invest it in the stock market.
Okay.
And that's just a choice. I mean, some people want to do that so they can have nicer clothes and a nicer car, and that's fine, but they probably will not have an easy path to retirement.
And they may not remember.
Yeah, you really I just don't think you can have both. I mean, most of us can't have both. If you're making $1 million a year or $5 million a year, whatever, you can probably have both, right? But you probably want to go and be the Uber driver in the evenings. But if you're doing something on the side to make a little bit of extra money that you don't need to pay your bills, I would think that the wisest thing you can do with that money for your future would be to invest it in a business or to invest it in the stocks. In the stock market. I don't know which one is better than the other, but both of those are probably better choices than going out somewhere for dinner that's more often than not, or going to clubs more often than not, or traveling more often than not. I mean, it's great to travel, it's great to go out to dinner. If you want to go out with your friends to a club, I mean, that's fine too. But if you're working and spending all of your extra money on that, that's not going to help you in retirement. And so we all kind of live for the moment in some respects. The idea is to not live for the moment in all respects. You have to plan for retirement, or else you'll be looking to the government to fund it for you. And I don't want to rely on the government or anybody else to take care of me when the time comes.
Yeah, it's pretty scary when you see the numbers, like the population expansion and what we're going to have. And it's a nice backup cushion if it's still there, but to count on that solely is pretty risky. What we've learned today from just our chat is being consistent, starting early regardless of what your income is, just making it a priority to invest something and live below your means so that you can commit to that money for later.
You have to make choices. Life is all about choices. So if you want to have a fancy car and a fancy place to live and fancy clothes and go out every night and save enough for retirement, it's very difficult to do that. You can make choices to work harder, to save more, or to do fun things. And I think a balance, a healthy balance is probably the right mix. Certainly if you want to save enough for retirement, you've got to start young, and then you've got to be aggressive, and you've got to define what enough is for you. You can't have financial success and not spend any time on it.
No. Thank you so much for taking this time. I know you're busy, and I really appreciate you helping us to just gain some insight. Remember that you are in control of your life. We all are. And it's all about the choices that we make along the way, which we were talking about earlier. So every day you have a choice as to where your money's gonna go. Think about it on a daily basis. Okay, where did my money go yesterday? Where can I put it today? Thanks for tuning in, and see you on the next video.
Good luck, everybody.
Bye.
Bye-bye.